Welcome everybody back to the Master of Money program. I'm Steve Beaman, your host, and what a pleasure it is to spend this time with you tonight. We are sponsored by the Society to Advance Financial Education, a not-for-profit organization dedicated to empowering you with the knowledge and tools you need to thrive and prosper in the 21st century. We thank you for joining us, and we also want to thank our friends at Harvest Investment Services for allowing us once again to use this beautiful facility to record this live show. So whether you're here with us in the audience or you're joining us on Ustream, streamed live throughout the world, we're pleased to have you with us. We do want to mention the Master of Money show is a two-part program. This first half hour we spend with you live through Ustream and through video. The second half is done live with our audience here in the Oak Brook, Illinois area. We welcome you, of course, to join us live if you're ever in the area, and we thank you for joining us for those who can. Now, we do want to mention, just last week, we did have some people from around the world who mentioned that they were having trouble with our sound. Well, we devoted a lot of energy with our engineers to make sure that this week we were able to get that sound properly done. So we hope that you're enjoying the experience tonight. And I also wish to mention we got some feedback on once in a while the slides we use are a little difficult for people to see in the Ustream arena. Well, if you'd like to get a better copy of our slides, email us at questions@Society to Advance Financial Education, and we'll get those to you directly. Now, as we do every week, we want to review our discussions from last week. We are out to educate people ultimately, and last week we spoke about a very hot topic in economics called behavioral finance or behavioral economics. We shared with you the three basic decision processes people use, whether it's heuristics, which is using the rules of thumb that we all grow up to enjoy as a benchmark for our investment decisions. We also talked about framing, which is another method people use to make decisions that often can lead them down the wrong path. And then we also spoke about the general inefficiencies brought through emotional fear, uncertainty, and doubt, and the impact of those decision processes on you. Now, interestingly, this week's program on capitalism versus socialism plays directly into behavioral finance because oftentimes you and I get caught up in the political fray of the day, and we sometimes let the emotion of that drive our economic and financial decisions. We've certainly seen that since the financial debacle of 2008. So we welcome you to join us for Capitalism versus Socialism tonight. And we are very, very interested to share that with you. Now, we want to also welcome you to send us questions always at questions@Society to Advance Financial Education. We did receive a question last week on something that's been touted in the radio systems and you may have heard of. They're called 770 plans, or the President's Secret Plan. Now, these are investment strategies that get people interested because they sound super secret and that you'll learn something no one else knows. Well, I shared that that comes directly out of an insurance program called Whole Life. And that is not a secret. It's something that 3 weeks ago in the Master of Money, well, we covered that in depth. So it's another reason you should tune in each and every week to the Master of Money. We do cover these things as we go through our lessons. We're very pleased once again that you've joined us. And as we go through the questions that folks ask, we always welcome you to send them. Now, in the geopolitical events that happened last week, and we do try to bring those to you, certainly the relevant ones, the markets, as you experienced, were very choppy. In fact, we had some significant down days, all driven by this continuing global uncertainty. We saw continued erosion in the global and economic markets, Germany reporting some very poor production numbers. As you look at the Mideast, as you look at the instability in the Eastern European regions, as you look around the world, this instability is causing people some fear in the markets, and that is certainly what the market was reacting to. The other important news last week that may have slipped by some of you is that for the first time since the late 1800s, the United States is no longer the preeminent economic player in the world. Indeed, we were surpassed by China last week with about $17.5 trillion in gross domestic product, compared to the United States' 17.4 trillion. Now, that's not a real surprise when you think they have an economy with 4 times the population the United States has. Our standard of living is still about 5 times the Chinese average standard of living. So while this isn't a surprise, it does cause some concern for our export markets, and that's why we want to keep an eye on the power of China versus the United States. Now, counterbalancing that was news released, which may come as a surprise to many of you, and that is the United States will shortly become the world's leading supplier of gasoline. Yes, indeed, with our newfound shale reserves, we will be the leading producer of oil in the world. So all is not dark, even though the Chinese have gotten bigger than we are. Our free markets and our free economy still generate much higher productivity and a much stronger standard of living. Now, in the United States economic news, the most interesting thing released last week was the Consumer Confidence Index from September. We know, you and I, based on behavioral finance, that the way people feel about the economy, well, that's oftentimes how the economy will go. Well, the Michigan Confidence Index said that in the month of September, people were feeling just a little better about things. Now, clearly, that's coming off the powerful second quarter we had, which that came off of a really horrendous first quarter. Point being, we don't want to let our emotions get the best of us. Lessons from last week of behavioral economics come right to the heart of that matter. We did continue to see strength in the US dollar, and we were asked by one of our members why we see that. To what do we attribute that? Well, we explained that simply the United States dollar is still the last refuge for security for your money. If you look around the world, people are resetting their values. In Europe, it's common to see negative interest rates. So you put your money in the bank and you pay them to keep it for you. Well, here in the United States, we have 0 to slightly positive rates, and the US dollar keeps its standing as the world's safest currency. Now, we will see that change over time, perhaps, as the International Monetary Fund and other organizations look to create a more global basis for monetary currencies. Now, in the markets last week, we clearly saw the U.S. Dow Jones Industrial Average get hit, major numbers, down 1% and 2%. The S&P 500 and the NASDAQ showed the same. As we've discussed, this was driven by the uncertainty and fear in the markets of what's going on in the Middle East, Eastern Europe, Asia. The other thing hitting it, of course, is Hong Kong, and we've spoken about that for a couple of weeks. Hong Kong was sold to the Chinese in the late 1990s with guarantees that it would remain a free economy. 2 Chinas is the policy. Well, in the last few months, China has begun to change their democratic leanings and control more the voting that takes place in Hong Kong. Well, the Hong Kongese aren't happy about that, and they've begun rioting in the streets, and that uncertainty is playing into the markets. Now, if that has you down, well, you might want to consider having an apple tomorrow. Carl Icahn, that famous investor of guru status, came out and actually said he thinks apples are worth, well, about $200 each. He, of course, is referring to Apple computer stock, which is trading right now closer to the $100 level. But Carl came out with his own prognostication and said, look for $200 prices for those apples. Now, to be straight up, we know he has a vested interest in this. He happens to own quite a lot of Apple stock. And finally, the International Monetary Fund's Christine Lagarde came out last week in the midst of the global slowdown that's taking place and suggested from the United States through Europe and Asia, the central banks and the governments begin to continue, or I should say continue, on a program of easing money and stimulating the economies. Now, with all due respect to Ms. Lagarde, I think we've already seen a great deal of that, and I'm not sure the results we've seen would warrant another round. But we will see what the world does in response to this global slowdown. The society's position is simply that we hope it does grow. And in fact, tonight's program plays right into this. We are going to be tackling a never-ending question, a question that has caused wars around the world. And that is, Capitalism versus socialism. It's a debate raging now as it has for the last 100 years. And we want to look at some things first. Number one, because we are out to help you. We want to make sure you know how you can profit from the differences in those two systems around the world. But we want to take a look and answer these questions. If capitalism is so great, why does it create so much inequality? Why do we have the 99% to the 1%? But if socialism's so great, why has it never created prosperity? Let's remember when it was tried in England in the 1970s, not only did they have a dismal economy, but that developed nation actually had brownouts rolling through the country, which was much more reminiscent of a third world country. So we must ask ourselves this: if capitalism then is so bad, why does it create all the prosperity it does? And if socialism as an objective is so bad, how can we argue with equality? So we welcome you to buckle your seatbelts. We're going to be going through tonight a lesson from the Path to Prosperity Library. Lesson number 5 talks about macroeconomic theory. We welcome all of you to explore the path to prosperity. We are a not-for-profit organization, and for folks who donate $100 or more, we provide them the award-winning Path to Prosperity. This is our 2-volume, 12-CD, 23-lesson audio library, and we cover everything from taxes and budgeting, real estate investing, day trading, banking, insurance, and yes, Disc 5, Understanding Core Economic Concepts. So tonight, we're going to take a lesson from the Path to Prosperity, and when we come back from this brief message, we are going to dig in to capitalism versus socialism.
Have you ever gone online and Googled the words financial advice? When you do, you get over 3 million results. That's a lot of places that want to tell you what to do with your money. There are new websites that take your information, run it through their calculators, and generate automated financial advice, with recommendations about how you should invest your assets and plan for your future. They're called robo-advisors. But they're not real advisors, because they're not real people. Robo-advisors crunch data, then spit out cookie-cutter recommendations based on financial formulas they have created. Robo-advisors don't know your family, your history, or your personality. They don't know how you feel about your children or your charities. They don't understand what you hope to accomplish with your money. So here's the question. How can you trust financial advice from a source that doesn't actually know who you are or how you feel? You can't. Why? Because you are a person, not a number. You're an individual, not an algorithm. To get personalized advice, you want a qualified financial advisor who knows you, not a computerized avatar that thinks it does. You want an advisor with proper credentials and credibility, supported by an organization with compliant process and protocol. That's what we have. That's who we are. And we have the ability to understand you better than any computer program. Of course, we have the latest innovative technology too, but we use our technology differently. We use technology to support our expertise, not to replace it. We analyze, evaluate, and interpret your data to provide advice specifically for you. Advice about how to achieve your unique financial goals. Robo-advisors can crunch numbers, but numbers are only part of your story. The formula we follow puts you in the center of the equation, and that's exactly where you want to be.
Welcome back to the Master of Money. Again, I'm Steve Beaman, your host, and what a pleasure it is to share these few moments with you. We hope that each and every one of the Master of Money programs gives you a little nugget you can use to provide more prosperity for you and your family. Now let's take a look in detail at tonight's topic. In some ways, it's very simple. What are the big differences between capitalism and socialism, and how can you profit from it? Well, let's look first at the fact that capitalism is a discovery of human nature made by someone named Adam Smith hundreds of years ago. It wasn't invented, it is simply a trading system based on the notion that free people executing freely in a marketplace, overall serving their own rational self-interest, will create a rising tide that lifts all boats. So capitalism has been employed in various countries around the world and has been credited with developing enormous wealth. It certainly understands how to use resources and how to use people. By the same token, we know that capitalism can lead to dramatic inequality. The fact of the matter is we're not all equal. Some of us work harder than others. Some of us are, well, smarter than others. Some of us are better looking or not so. We can't control those things oftentimes, but within a free market capitalistic system, those characteristics oftentimes can come to play. So if we look at capitalism and then shift to socialism, that was a system that was invented, if you will. Throughout history, there has been a debate. Which is more important, the individual or the collective? We all know that in the context of a family, sometimes the interest of the family takes precedence over the interest of the individual. Well, socialism believes that the community is more important, and this goes back to Plato versus Hippocrates in ancient Grecian times. This is not a new debate, but it's one playing out since the installation of the Industrial Revolution in the 19th century. We know that capital is what's used to make money. The old expression, it takes money to make money. So those with capital end up owning the resources of production, and the people who believe in the socialist model think that's more important for the community to own. So we have two very different systems. One that believes the individual is of paramount importance and trades freely based on their own rational self-interest, and the other that believes the community is more important, that people need to be compelled sometimes to be benevolent. Well, let's be honest, as we look at those two very disparate systems, there really are few countries, if any, on earth that are truly capitalistic. Well, on the same token, there are very few that are truly socialistic. I think we could look at some examples. For example, on the capitalist side, you clearly could look at Hong Kong, which has been a bright spot for the Eastern economies, especially for China. So much of Hong Kong's growth has been because China has left it alone. Other countries like Singapore fall into that camp. Now, you might be wondering about, for example, the United States. Well, in a report just issued last week on the global economy, it was reported the United States is now 12th in economic freedom around the world, tied with Great Britain. Ahead of us are countries like Canada, Australia, New Zealand. These countries have freer markets than the United States, and we will see what that limited freedom or that lesser freedom does to our economy. Now, on the other side, if you want to look at truly socialist countries, there aren't too many of those either. I mean, we have to look at the extreme examples of, well, North Korea and Cuba. Those are socialist paradises for the people who live there, unless you're not in the 1%, in which case it's not really paradise. But we see those two extremes coming into play. And as we look at the importance of this for you and for me, we have to recognize that we in the 21st century will experience a globalized economy. The fact of the matter is we are no longer national economies bounded by geographic borders. I'm speaking to you tonight on Ustream, a social media system that's broadcasting this message around the world. There are no more barriers. You have to become adjusted to a global economy, and therefore you have to look at your investment portfolio as making decisions in the framework of a global economy. Again, going back to behavioral finance, if you are living in the United States and you frame your decisions solely on an American agenda, you'll miss out on some great opportunities that are coming from the rest of the world. We think this is a critically important topic for all people. Now, we know that the capitalist countries, the developed economies especially, in the 21st century will be providing the capital for the undeveloped countries. If you look at Central Africa and West Africa, especially those companies like Liberia right now suffering from the Ebola outbreak, those countries will require capital for infrastructure, for development of distribution systems. That money will come from people like you, making private investments into company stocks that sell into those areas. Well, we welcome you to participate in the growth of those markets, and you can do so through exchange-traded funds, stock acquisitions, and other things which we teach about here on the Master of Money. The other thing that's extremely important is what's called a reserve currency. In the first Master of Money program, we talked with our members about banking, global banking, and the monetary system. Well, we educated them about the real idea of a reserve currency and why it's important for countries to be able to trade. Well, as the world globalizes and China, as we discussed earlier, becomes more important, the United States dollar as a reserve currency will make less and less sense. So as we globalize and we look at the challenge of the economies around the world, we very well could see a global currency. Now, I know that'll scare many people, but you can look at that as a natural evolution of our globe as it grows. Now, we looked, as I said, at a study last week that looked at the nations of the earth on 5 criteria. And this is a way they judged how free they were economically. Those criteria are size of government, in other words, how much of the economy is consumed by the government, and the highest marginal tax rate. Now, we know taxes are very different around the world. In the United States, some would argue that we have a very high tax rate. Well, in Europe, they have a value-added tax. It's not as visible to the Europeans, but that certainly jumps up their tax rate quite a bit. So we look at the consumption of government over the total economy as a measure of size. The study also looked at the legal system and private property rights, independent judiciary and such. Many countries around the world don't respect private property, and the courts aren't set up to do so. Sadly, if we look in Russia today, much of the Russian economy is not based on contract law, but rather based on the law of the streets. So we looked also then at sound money, and this is close to the heart of many people as we look at the central banks of the economies around the world. Are those central banks sensitive to the growth of the money supply, the embedded inflation that brings about, their exchange rate with other nations, and the variability of their inflation? Right now, I mentioned earlier, the United States currency is still the last refuge for people. It's still the place to go if you're looking for safety. But as the globe changes and as we become more globalized, well, it's highly likely there will be other places to go. In fact, just to jump ahead, next week's program, which I hope you'll join us for, we're going to be looking at gold, silver, and the commodities, another lesson out of the path to prosperity. We hope you'll join us for that too. So if we look at size of government, the legal system, the money, we also looked at the freedom to trade. This is where, if you look, for example, at Hong Kong, very free markets, very able to trade with their neighbors. Well, other countries aren't quite so friendly. They may put tariffs on inbound or outbound goods, and they have regulations that cause there to be a black market in those countries. We see this in the Middle East, we see it in Asia and Africa mostly, but to some extent in Eastern Europe. Well, that is a measure of economic freedom. And then finally, we looked at regulation, the credit markets, the labor markets, the entrepreneur markets. I live in the United States, and one of the things that I've talked about time and time again in speech after speech is the overregulation taking place right now for the entrepreneurs in our society. It's becoming more difficult for Steve Jobs to build that first Apple computer. We have zoning regulations, environmental regulations, so many that it's causing a great deal of people not to pursue their dream of entrepreneurship. We need to watch that here in the States and around the world to make sure that people are incented to start small businesses. That is, after all, where social and economic migration take place. And so we look to the heroes of the small business community, and we are huge proponents of those folks. If we look at those 5 criteria, we can look at the top 10 economically free economies. United Arab Emirates, a little bastion of freedom for economics in the Middle East, Canada, Australia, Jordan, and then a tie between Chile and Finland. I mentioned to you the United States and Great Britain tied for number 12. So those are economies in which you will see the economies continue to grow at rapid rates. We would urge you to consider those economies as part of your investment outlook. Now, on the other side, we do like to give the good, the bad, and the ugly. Let's take a look briefly at the bottom 10. Listed again in order: Myanmar, which is an impoverished little country, together with the Democratic Republic of Congo, Burundi, Chad, Iran, believe it or not, as impoverished as they are, still building nuclear weapons, Algeria, Argentina, Zimbabwe. Again, the Republic of Congo. Congo is in two parts, if you didn't know that. There's the Democratic Republic of Congo and the Republic of Congo. So they're actually two separate countries. And then finally, that bastion of socialism in South America, Venezuela. An economy held only up by its affinity for natural fossil fuels. That means they export a lot of oil. So those countries are at the bottom of the economically free status, and we would expect them to not be as good of performers as the free economies. So the question is, how do you make money on this? How do you enhance your family's future and prosperity for retirement, for college, for other things? So what we try to do is give you some investment ideas. I will tell you once again, the Society to Advance Financial Education is a not-for-profit organization. We don't sell investments, and we're not out to put you into any specific idea. We're out to be your friend in the financial services industry and to educate you on all of the possible options. So here are some exchange-traded funds that you might consider. We would urge you to talk to your advisor in concert or your banker, whomever you use, to make sure these fit your specific needs. I'm just going to list them down. RBS Global Big Pharmacy. There is a propensity in the globe right now to reward pharmacy companies. We are dealing with all kinds of new drug problems. You've all heard about Ebola. We have these kinds of diseases and viruses around the world. Pharmacy companies are attacking these as hard as they can, and we would expect their growth rates to sustain for many years. iShares, that provider of ETFs, has something called the Core High Dividend Fund. That's a global fund that looks to return money to you based on the dividends of the companies that they invest in. Now, if you've attended most of the Master of Money programs, you know that one core measure of value for a stock is how high a dividend it pays. Well, this particular exchange-traded fund looks to dividends to support their value. PowerShares has one. iShares has two more for global infrastructure and consumer discretionary spending. Russell has an ETF. Russell is a provider of indexes around the world. You may have heard of the Russell 2000 and other indexes. They're a highly regarded company. And a local company to Wheaton, Illinois, First Trust Securities, offers one as well based on cloud computing. That's an emerging technology that is helping people around the world build excessive storage so that programs like this can be brought to the world at large. Those are some ideas. We've given you the overall rating and the risk grade for them. Now, I do want to mention once again, we did have some commentary at questions at societytoadvancefinancialeducation.org stating that folks couldn't see the PowerPoint presentation through the streaming video. Well, like many new technologies, this technology isn't quite where it needs to be yet. It's getting there very rapidly. But if you'd like to get a direct copy of these PowerPoint presentations, please write us at questions@societytoadvancefinancialeducation.org, and we'll get them right out to you. Now, one of the biggest takeaways from tonight, and again, this plays into last week's lesson on behavioral finance, is to let the facts rule. It's very easy when looking at global investing to have biases against it, whether you live in Switzerland and think the world is made from the Alps, or you live in South America and think the world is a rainforest, or you live in the United States and think it's a cornfield. The fact is, you don't want to frame your decisions on where you are in the world. You want to base decisions on the facts of what's happening. The CIA puts out a world fact book on countries. We don't expect you to read that. We'll do that for you. But it gives some real insight into what's going on around the world. So we would welcome you to ask us questions if you have a country specifically in question. The other thing that we would ask that you take away tonight is not to be ruled by something called continuity bias. In psychology, they've shown that there is a propensity in people to always think tomorrow will look like yesterday. That's easy to see when the sun's going to come up because, well, it always has. Well, in investing, continuity bias can be a big mistake. Just because something has been in the past doesn't mean that it will be in the future. Let the facts rule and don't be guided by emotional issues. You'll hear us say that time and time again here at the Master of Money. Well, tonight, we've spent some time with you looking at what is almost an eternal question, the importance of the individual or the importance of the community. The fact is, around the world, most nations have a blending of that. So there's no perfect freedom, there's no perfect socialism. But we would urge you to look at your investment ideas based on the relative freedom of these economies and make decisions that are there to make you prosperous. Whether you think the individual is more important or the community, that alone should not frame your decisions so that you make an investment mistake. Again, if you have questions, we welcome you to write us at questions@Society to Advance Financial Education. I want to mention to you once again, this is a lesson from the award-winning Path to Prosperity audio library. This has been awarded gold status by homeschooling organizations and other organizations because of the comprehensiveness of its offering. For people who donate to the Society in excess of $100, we will send them a complimentary copy of the Path to Prosperity. Tonight's lesson is on Disc 5, Understanding Core Economic Concepts. So as you go forward, we ask for your support. The Master of Money is written and produced by the Society to Advance Financial Education, a not-for-profit organization truly out to give you a friend in financial services. Right below the video, for those of joining you on the Society's website tonight, you'll see a button for GoFundMe. Well, we would welcome you to participate as we share this message. And if you can step up with a donation of $5, $10, $100, all of that money goes to help spread a message of financial literacy to those who need it most. We're involved in a number of organizations around the country doing similar things, and we need the support of viewers just like you. So we want to thank you in advance for your support. We do want to thank Harvest Investment Services, our primary sponsor. They allow us use of their facilities, and in fact, they've given us wonderful ideas on how to build better content for you each and every week. Next week, join us once again. We're going to be talking about gold, and we're going to look at how gold and commodities can help hedge your portfolio against inflation and maybe even make you money. But we're going to talk honestly about it. We're not gold bugs here. We think it has a viable place in a portfolio, but we're not those folks telling you run out and buy all gold. We have a lot to discuss, so we hope you'll join us next week for another edition of the Master of Money.